Hello everybody, welcome back. Christmas Eve over here, I'm sure it is over there. And we're just going to look at Bitcoin. There's no point in looking at everything else. Everything's generally moving. The market is generally more bullish than Bitcoin, but Bitcoin is the one that's dictating the overall health of the market. So we're just going to focus on Bitcoin. If Bitcoin's healthy, then the market should remain healthy also. So if you're not subscribed to the channel, I should try and I suppose, blow my own trumpet in a way. No one's absolutely accurate the entire time, but over the last week, it's been quite hard for me to make these videos because end of term, childcare and things like that. But we predicted the XRP pump. We said that Bitcoin was looking good, that Bitcoin was looking for a breakout. We also spotted the bullish divergence and said that there was one tick away from the bottom. That got ticked. Bitcoin hits the bottom. XRP continues with the pump. And now we're just focusing on what's going on today. So like I say, no one's perfect the entire time, but I have had a good run, I would say, with the videos I've been making this last week. And generally speaking, most of the time anyway, I have to say. Right, so that's enough self-congratulations from my own technical analysis side of things. Let's have a look at what's going on right now. So on the daily, it's actually looking quite good. The standard Bollinger Band strategy is being applied here. So we're coming up to the top side of the range rejection. Bollinger Bands are expanding, which is good, meaning that if this is basically the way it's going to go over the next few days, next few weeks, if these bands continue to expand, this should suggest that we are going to keep making higher highs and higher lows. Generally speaking, we're outside of this accumulation zone, right? Worst case scenario, which is still technically possible, but I wouldn't really say that it's very likely anymore. The bottom side of the range being 40,500 and the top side of the range being 49,500. This was the accumulation range, and for the most part we held about 46,000. We had a few ticks down, and this is where we said that we're likely to get a breakout because the bullish divergence which we saw on these three ticks here played out, and this is why we're getting the launch. We're also breaking out of a downtrend on the RSI, so an RSI breakout with price action breakout is usually a good sign for continuation. So I'm not looking for this to suddenly moon, although it could do. What I'd be looking for is for us to start to reclaim some of these areas. The next one is going to be the 50 exponential moving average, which is basically about 52,700 or thereabouts. That would definitely be the top side of this range, probably for the next few days or so. And if we break out into through there, we're back into what was the major buy zone, before the Megatron dump. Traditional markets driven by Megatron dumped all the way down. So like I say, if it wasn't for that was outside of the chart, which is something that we also expected. We did expect a giant plunge. We took some chips off the table in anticipation for that. So that, even though the chart wasn't saying we're going to dump all the way down here, there were other things that we were looking at to suggest that we would have a massive dump into the low 40s. And we, like I say, we predicted all of that. We got it all. Like I say, it's not about saying that I got it absolutely right. It was a theory which ended up being true. So it didn't take me off or anyone really off guard, especially for those who watch the channel or on the Patreon. We did speak about it several times actually leading up to this dump, and so now what we're looking at is for us to reclaim this major area. One of the main reasons I didn't think this was going to be a bear market is because of this. I said, look, this could happen. If it does happen, it's just a buying opportunity because it doesn't reflect the chart. The chart without the Megatron virus kicking in and traditional markets dropping off probably would have held this area. I think this area would have held, and it's this area where we start to turn around and get actually pretty bullish, and for this to basically continue with what would have been just a normal consolidation. It was consolidating, there's no question about it. It dropped off quite heavily, and so if we imagine that this accumulation took place within this area, and then when we break out from here, this is where we start to get really bullish again, because essentially we would have accumulated around this zone. We ended up accumulating down here, but time wise we're still looking for this to resolve once we break out from about 57,500, and that will launch us up to a brand new all-time high. So I'm not saying that this is going to happen anytime immediately. I think we're looking to the end of the month, into next month, the earliest really, but that's where we can turn around and go, yes, okay, excellent, because we'll be back in this area, we'll be back above this red cloud. So if we turn this over now to a weekly, you can see it's a little bit more obvious on the weekly. Weeklies hold a lot of relevance for me on my trades, and we see that we're getting rejected on the 21 exponential, so it's not the center of the Bollinger Band. It's a 21 exponential. It more or less can be used as a centerpiece for marking bullish and bearish momentum. So being below here is obviously not a great place to be, but we will stay. We will probably stay below here for maybe this week, I think. If not, we can push up to the top side, which is the actual 20 weekly moving average, so the center of the Bollinger Band, about 53,000. So I'm looking to see this week sort of hang around in this no man's land really before we get back into this major area of I won't call it buy zone anymore, because the accumulation and buying zones are down here now. So this is basically the turnaround area. So all from here to basically, I suppose, inside or at least outside of this range is a no man's land. It's almost like a no trade zone, really. No trade zone, I would say. And we will be waiting for this to resolve to the up, and then we can just enjoy the bags that we filled down here, whether it's altcoins or Bitcoin, or we can start thinking about picking up a trend, doing some leverage again. But for the moment, I would say this is the no man's land area. Technically, the bears still have control while we're below at least the 21 exponential, which is where we were rejected today on the weekly. But bulls have basically come back into force, and they're shifting the momentum now to the up. So I'm definitely in favour of this resolving sooner rather than later. And one thing I did say is that we do a measured move, and this isn't to the T, but we do it from the peak to the bottom, and then that's where the bottom was formed. We'll be looking for this accumulation to effectively be ended around this time, which brings us right to the end of the month. So we are looking for a glorious January, to be honest with you. It might not be January the 1st, but it could be any time from the 30th of December that we actually start to moon on this one. But I personally don't think we're ready to moon just based on the time frame of when this accumulation is destined to end. I mean, arguably it's already ended. Every day that we're above 49,500, it's ended. If we stink back into it, that's no big deal. It's just another opportunity to pick up where we're pick some more up, or look at certain altcoin setups and pick them up as well, because the idea is that this is going to resolve to the up, and it will resolve earliest from December 30th, but more likely it's gonna resolve in January, I would imagine. And so, no man's land trading right now. If we dip back into the accumulation zone, it's no big deal. Major moves will take place once we break out of 57,500, and then we just pick up where we left off. Now, there are obviously some issues still floating around in the outside world. We don't know what the new year will bring with Megatron, and that will have an impact, like it clearly saw here. But as I said in the first place, I said, look, we expected this because of, if anyone was around during 2020 when the pandemic struck, we had a massive one of these, and it didn't reflect the value of a Bitcoin. It didn't reflect the value of anything. And what we saw was a sell-off, an enormous sell-off in anticipation for bad news, essentially being priced in. Nothing ever reached the low of that wick again. Back in 2020 when we got that, this is what we saw. We saw one of these, much bigger, much more dramatic than the one we've seen recently, but again caused in exactly the same kind of way. It doesn't reflect the chart, it doesn't reflect anything. It was just basically well oversold and an opportunity to buy, and then thereafter we went on to have a massive tear up. So this is like the March of 2020's baby brother, and I would expect to see basically it resolve in pretty much the same way. Now, I think at the same time we're going to have diminishing returns. I mean, if we think about the absolute wick low here to the absolute top of this formation here, even up here, that's a 1,782% move. I don't think we're going to be getting something quite along those lines. But I've said it before and I'll say it again, I'm not like a massive moon boy, but I do expect that by the time Bitcoin reaches its peak, I think we'll be looking into the $200,000 region for a single Bitcoin. That will probably be, some point next year, and I will be looking for some savage sells around there. But for me to say it's going to happen January, February, March, that's not how it is. And this is a question I got on the Patreon live stream, I suppose, the other day. We don't try and determine things in the form of time like that. Not if we're breaking out of a 4-year cycle and moving into a different formation in this lengthening cycles. It's basically got to look at it day by day, week by week, and see how overextended we are. And the best way for me, and the easiest way for anyone, would be to look at the previous bubble pops. And these aren't bubble pops; these do mark significant tops. And it's the money flow index always seems to get a very good read on a weekly. If we're moving into the 90 read, anywhere above in a 90, it's where you start to think about let's taking some more chips off the table. In the past, we've reached 95 here in the bubble pop of 2017 into 18. The peak, the absolute peak of 2019, when the bull market began, Bitcoin went on a massive tear up from 3,000 to 14,000 in a very short space of time, caused a pop, and that pop basically continued down all the way down to when the pandemic started. So it was a long consolidation. You could call it a bear market within a greater scheme of bull market, but again, Money Flow Index sort of told us where to start to de-risk, and we would have managed to get out at a relatively good area, you know. And again, over in 2021, we found the top of Bitcoin here. This carried on afterwards, but this was different. We moved into altcoins around here because altcoins were massively oversold, and the Bitcoin dominance chart was reaching almost a 74% dominance. And so we moved out of our Bitcoin at the top into altcoins at the bottom, and then enjoyed an enormous alt season. So I would be looking for the same kind of read again. When we start to get a money flow index into the 90s, pushing up above 92, then we'll start to think and reassess the situation. But all of this is months away, and it's just an idea of, you know, how we're going to try and determine the absolute top. So for us to say it's going to hit this amount by this time, it's not really possible to do that. But what we can do is assess the situation day by day, week by week, and whether we get out of the market altogether or we flip from altcoins into Bitcoin and Bitcoin back into altcoins. That's how we trade, and that's how to trade, and that's how we've managed to crush the market year after year. You know, we don't look at an exact model and say we're going to work this one out to a T. We're going to work things out bit by bit, day by day, week by week, and do our best to capitalize on this extremely lucrative environment, which it still is. The bull market has never finished. It started from 2019. It's still in play. I mean, you can look at the weekly and say, of course, it's still in play. And I would be looking, honestly. I do believe that, you know, it's probably going to reach into the $200,000 per Bitcoin before it's time for a bear market. But again, all of this is open to interpretation. We look at it bit by bit, week by week, and we'll determine how heavy and how overheated it is at the time. Anyway, thanks for watching. Like and subscribe and all that sort of stuff. And if you want to join the Telegram, there's a link in the description, and there's a Patreon if you want to take it one step further. But don't go on anything that's not on my YouTube, because there's so many scammers out there. If you want to have anything that's ever attributed to me, it's always going to be in the video description, and it's not going to be anywhere else. So don't search for me, don't go on anything else. It's all going to be in this link, in the links below. Thanks for watching. Hope you have a nice Christmas. Probably won't make a video tomorrow. We've all got better things to do. But I'll speak to you probably on Boxing Day. Thanks for watching. Take it easy.